Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Barajan, currency analyst, and today is Monday, September the 11th, 2017. Today we will look at the dollar yen, the euro dollar, the euro pound, and the pound dollar pairs. So let's start first with the dollar yen pair. We can see here on daily chart, USDJPY fell below its recent trading range. Previously, we had seen that the pair had managed to bounce higher after falling to just above the 108 level. We can see in gray here in the chart. That's previously provided good support in previous downtrends, but on Friday we saw the pair hitting a 10-month low, 107.31. Although they have prices have bounced higher today, we can see RSI is moving up, though still below the 50 neutral level. The MACD, though, is still showing a very much bearish bias in the near term. We can see the histogram being below the red signal line. We can see there was resistance today at around the 108.70 level. If the current uptrend continues and we see a strengthening of the upside momentum, we should see resistance coming from around the 109.20 level, followed by the 109.75 before it would reach the 50-day moving average at 110.65 at the moment. But if today's upside momentum fails to hold, we will likely see fresh falls, possibly targeting the low of just on before the US elections. That's around 105.50. Let's move next to the EURUSD pair. We can see on the daily chart that prices remain firmly within the current uptrend, but let's move on to the 4-hour chart now. We can see that although we did see strong gains on Friday, they have retreated, and at the moment they are actually in fact trading in the middle of the current linear regression channel. The prices today have been they're stuck within the 78.6 to 61.8% Fibonacci retracement level of the down leg from 1.2069 to 1.1822. Support coming at the moment from 1.1975. Further falls would see it falling to the 50% Fibonacci level at 1.1945, followed by the 38.2% and 1.1915. Immediate resistance is coming from the 1.2015, and then of course we have the Friday's high of 1.2092. If you look at the RSI, it is fairly neutral. It's trending down, so the bias is slightly tilted to the downside in the near term just at this moment, but knowing if it does pretty much remain with its current uptrend, we should see USD dollar targeting the 1.2220 level in the near future. Let's move on to Euro Pound now, and similar to Euro USD, the Euro is in a current uptrend, although against the pound, the euro actually has fallen to the lower of the bottom of the linear regression channel, finding support at 0.9075. We can see RSI has slipped into negative territory. The stochastics are just at the oversold level. This could potentially signal an upside correction in the near term, but for now prices are struggling to hold above the bottom of the channel. If they do break below that, we should see it hitting the 50-day moving average at 0.9025 at the moment. So I mean, given that it's so far managed to hold within this current uptrend, let's look at the potential resistance levels. If we do see further gains in the medium term, we have the 0.9142 level, previous congestion level area, as well as the 0.92 handle, followed by 0.9260. And if prices do manage to break above the 8-year high, in fact, of 0.9306 that we saw back towards the end of August, we should see the 0.94 handle coming into scope. And sticking with the pound now, we can let's look at how it's been performing against the dollar. The pound had fallen to a an 8-week low back in August, but now it has actually climbed to 5-week highs. Quite a bit of a reversal. We can see RSI has entered overbought territory, and the MACD has turned positive. So this is all indicating a bullish bias in the near term. We have the Friday's high 1.3224 likely to act as immediate resistance, and of course the high from back in July of 1.3266. Further gains should see the 1.3330 area being the next resistance level to watch, as this was previously a congestion area. But to the downside, given that given the Brexit uncertainty, the risk will always likely be to the downside. We should see support at around the 1.3160 level, followed the 1.31 handle, and then we have the 1.3050 area, and then below that the 1.30 handle. If we see cable falling below the 50-day moving average, that would take it to below the Ichimoku cloud, and we can see the 1.2920 level was also a previous congestion area as well. So obviously, in the longer term, we are seeing a slightly bearish shift, given the 50-day moving average and 200-day moving averages are climbing. But in the short term, also we do have a bearish bias as well. That is, if you exclude what's happening if outside of the technical world. Obviously, things don't look quite as rosy, but looking at the technical indicators alone, the pound is looking rather bullish against the dollar. That's it from me. Thank you very much for watching, and have a great day.